Good morning, everyone, and welcome to the Morning Leap with Quantum Leap. This is Friday, July 17th, 2015. It is also options expiration, so be careful out there. My name is Doug McKay. I am the founder and head trader at Quantum Leap. Quantum Leap is a private group of traders. We don't have a website. We don't have all these fancy sales tools. It's just us traders in a private live chat room. If you want more information, give me an email. Send me an email at quantumleaptrading@gmail.com or contact me through my cell 647-545-8065. Each morning we come together to look at the market and take a look at the macro to the micro, the structure, where we are within the trends, and then we drill down and look at the key decision levels and where we're going to do our trades and what our targets and our hypotheses are. It's basically an if then that strategy. Before I go, I do have to do legals. This information is for the purpose of educating members who want to expand their knowledge of the business of trading. It's not for trading or investment advice. You and only you are responsible for the trades or investment decisions you make. Trading futures or any instrument involves the risk of loss. Please consider carefully whether futures or options are appropriate to financial situation. Only risk capital should be used when trading futures or options. Investors could lose more than initial investment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own plan and your own risk metrics. Okay, so a couple things. First of all, let's take a look at the news. We had fairly decent news all the way around, but it was kind of muted. Core CPI came out, just basically as expected for Canada. Same thing with month over month. Building permits in the U.S. came out much better, 1.34 versus expected 1.11, and better than previous at 1.25. Our CPI came out as expected on both levels, and then housing starts came out ahead of both the expected and the previous at 1.17. News this afternoon, we've got or this afternoon, later this morning, seems like this afternoon. Later this morning, University of Michigan consumer sentiment, and then we've got Fisher speaking and inflation expectations all at 10 o'clock. But then we also got options expiration. So let's take a look at where the max pain is. Showing on the SPY 210, so 2100, and working their way up. I'm not sure we're going to see this, but you never know. I mean, that is where max pain for both the calls and the puts are. So we have to be, cognizant of the fact. I think we've held value overnight very well. And I'll talk about that. Let's talk about yesterday. Yesterday, what happened with my drawing? Yesterday, I didn't take the drawing properly. I don't know why it came out like it did. Yesterday, we had a rotational day. Our anticipation was we gapped up. We were expecting a rotational day with a slightly upward skew biased up to take out this 18 and a quarter, and it just grinded all day and then finally made the move in the afternoon. And we basically, the key level we were trading off of is at 21.12. There was a couple fake outs to the bottom that I can't show you because it didn't come into this picture. Actually, what I can do is show you on my real chart, because I thought I had cleared that chart and I hadn't, so we'll do that. So we opened up at the 1350, came down, broke below the 12 and a quarter. That was my key area. Got down to 1075 twice. And the next time they came down, they only got to 11 and a quarter. And from there, they held it. And then just slowly grinded their way up into that main target above and key line in the sand. It's still our key line in the sand above us. If we get above 1850, 18 and a quarter. I'm expecting a move up to test the 20, 30 and above, but we'll talk about that in just a minute. I'm just going to start clearing these things off here because I forgot to do it. I hate when I do that. Slows things down in here. All right, we can come back and get the other ones in a bit. Let's go and take a look at what I like to do is take a look at the structure of the market. Now, a couple things is we really don't have any naked crosses below us. So we have one that I was able to find this morning on the 15-minute. I'll show you in a minute. But what that's telling me is we've taken care of all our finished business. We still have the gap close down, the half gap down 2108.75. But right now, I'm thinking in terms of where we are in the trends. We've got great slope and separation on the monthly. Trend is definitely intact on the monthly. We had 2 weeks of trading below the 9 and the 20, and now we've popped back up. Consolidation in this area. Possible head and shoulder pattern setting up here if we don't break 34 and we break down somewhere below the 2035 on the weekly. Going to the daily, we do have that naked cross on the daily, and that's down at 2083, 2083, 2084 area. I'm looking at the 2089, but it's on the daily and not likely to be closed out today. Got to remember, got to think in terms of time frames. We are starting to get slope and separation on the 9 and the 20, so it looks like we could be starting another leg up on this trend up. Going into the intraday, you can see we've had very good slope and separation the last few days, and trend has been very strong on the 4-hour. And we took out that last naked cross down here with that gap down on Sunday night. Going to the 30-minute, again, we had strong trend consolidation overnight. Just they just expanded the range overnight. Most of the night we had a 3.25 point range, and we've spiked up on the news to 19 and a quarter. It was kind of a muted reaction to the news. I was surprised about that, but I think that has something to do with options expiration. And that max pain being down there at 2100. We do have a little bit of a trend starting on the 30-minute, but it's not real strong. We don't have as much slope as I'd like to see. Going to the 15-minute, we do have that naked cross on at the 2116.25, and that is basically where our balance is right now, is down in that 1650. That's our overnight VPOC. So possibility of coming down and taking out this naked cross on the 15-minute, especially since we didn't pop up and hold and run to that 2120 and a quarter. So be wary, but the trend is intact right now until we get back below the 17. And then just one last one on the 5-minute. You see that we've been trending up on the 5-minute and spiked on the news and then came back down. And we're currently trying to get and hold above the 20 right now. So we're getting a little bit of violation of the trend on the 5-minute, which could mean a move back down to close that naked cross at 2116.50. Let's take a look at the big structure. I wanted to point something else out to you as well. There is a W pattern with a possible cup and handle. So this is the W, measured move, 61.8 takes us to the 2119.89. Didn't quite get there, got 2119 and a quarter. So I consider this first move done. The secondary move is up to 2121.05, call it 2121. But we could get a higher, and I look at it, it won't be. I'll look at it on a chart and redraw it. I was thinking possibly setting up a cup and handle on as well, and I'll see if it measures properly with the higher right rim. I don't think it will, but the W is definitely still intact and has hit its first target already, in my mind. What's a couple ticks, right? Taking a look at the big structure. Of course, the big picture we've been watching is this micro composite going back to February 5th and the value area, and we broke out of the value area and gapped up, and we're currently trading in the 21.17.75 balance right now. You've got the 1550 CHVN, but I'm really looking at what balance was overnight, and you can see that overnight our balance and our VPOC, Globex VPOC, is 1650. So I'm using 1650, but we are creating a double distribution right now with a LVN at 1750 with the new CHVN, and we could get a Globex VPOC shift up to 21.1775 if we trade. I haven't done data download, but it doesn't look like. Well, you're probably looking at another 5,000 contracts. So we'll keep an eye on it. The high right now is 19 and a quarter and 15, but we could get some expansion. We still have 30 minutes to go. But on the bigger picture, what I'm looking at is this 18 and a quarter. This 18 and a quarter is the value area high from the microcomposite that goes from the 18th to the 26th, and then one tick below it is the value area high of the monthly microcomposite. So this is going to be a key level, and there's really not much up there. There's that 21.20 and a quarter, which was where I would be considering the first resistance and possible response of sellers, and that's because it was an important rejection point in the June contract. But then we have the 22, and the 22 is the range high for the month. It's also the value area high of the microcomposite for when we put in the September RTH high, all-time high at 21.2450. That value area from that microcomposite that runs from the 15th through to the 25th, 10-day microcomposite is there at 22. So above us, if we get above 18 and hold and get a close above that 18 and a quarter, then look for them to come up and test that 20 again, take out the overnight high, or expand it depending on when it happens, and then test this 22 level, and then above that, I think we make a move. My main target today is a takeout of, my main target above is a takeout of the 21.2450 to test that first of those unequalized highs. We have unequalized highs at 21.2450, 21.26 and a quarter for the September contract. The 24.50 put in the RTH, the 26 and a quarter put in the Globex, and then the 32.32, which is the RTH high in June, and then 34, the all-time high, and the all-time high in Globex in the June contract. But it is an options expiration, so we could get a move here and just chop around in this area most of the day, coming back and taking out that naked cross at 1650, taking out the overnight or the close from yesterday at 17, probably coming down to the 15. We've got the 14 and a quarter, which is the VPOC from this microcomposite right here. And then a key line for me is going to be 21.12 and a quarter. The floor pivot for today is 21.1275. So just above that. And then the change percentage of range target is 21.1187. So we've got a few different targets down here at the 21.12. It's also our value area low. So that's going to be a key level. a half gap fill in my extended target today is going to be down here at the 2108.75, and that's why I'm thinking that the max pain at 2100. I mean, that's a big, a big move for an option expiration day, all the way back to 2100. I mean, it's 18 points, but it's still, to me, I'm thinking that we're gonna test some of these low areas, but I think we have just as high probability of popping up and testing some of these highs. Anyway, let's take a look at the overnight and start moving our numbers over. So the line in the sand is going to just shift up one to the 1850. I'm sorry, Marvin, it is 2110. No, no. Is it 2110? Is Becky in here? Where's my I don't have it open. I just closed it out. So we'll take a look at it as soon as we're done here. And I'm just going to move this up to the 1850. Our overnight high right now is still 19 and a quarter, although it could get taken out again. Our overnight low, 2115, I think that's going to hold. And our overnight VPOC is 1650. And you can see that we're coming up and testing the 1875s. I mean, this market has done a remarkable job overnight of holding value higher. We keep shifting that value and holding it higher. All right, so we've got the LVN at 17, but it's not that prominent, and we've got the close here at 17. So I'm thinking that our main target below right now is the 17. There is a slight LVN at 1650 and that naked cross. I'm going to use the 16 just below it, which is the value area high. And I don't usually use a CHVN for a trade area, but I'm going to use this one because below that, I think we take out the overnight low at 15 and come down and take out the naked VPOC. We get the naked VPOC, the midpoint, the VWAP, all down here at 1450, and that's going to be a key level to me. And then once we're inside a value, I think then we have the possibility of coming down and testing and getting an 80% destination value area play down to that key level. And this is going to be a key level. I know we've got 1075 just below us, which is the range low of the gap up day, but I think it's the 2112 for all the reasons I just mentioned, the floor pivot, the CLVN, the value area low, the change percentage range target, all those things gives us a higher probability that you might see a responsive bounce off of here from the buyers. But if we do break 2112, and it is going to be a key line in the sand for me, I think we're going to see a larger move down to the 0875 and do a half gap fill. So I do have 1075 as a target and trade area, but my main target below range and below value is going to be at the 2108.75. Low. Okay, and then this 2108.75 area, okay, is just above a very important number, and that's the 2106.75. That is the microcomposite value area high that goes from February till now. And it's also, let me just bring it up here. It's also right there near the high of the day at 2107.75, which is just above the gap fill. I think if we get below the 0875, you've got a good trade into this 2106.75 with possible continuation. If we break that, because then that puts us back into value to come down into the 2103.75, fill the gap at 2104 and a quarter, and take out, we've got the microcomposite monthly VPOC down here at 2102.50, and then a 2-day microcomposite VPOC where they accepted value higher after the gap off of this balance 10-day balance area that we were trading in. And then below that, we get below 2100, then you think you got a really good strong case for a move back into balance, the longer term balance of this 93.75. That's my composite VPOC from February 5th till now. So that's the bigger picture of things. So below 0875, I'm targeting 675. Actually, this is going to also be a trade area. And it's going to be a key line in the sand below us. Okay, and then below that, like I said, we've got the gap fill. This will be a target. I'll just front run it by one tick. Whoops. Getting tired of this. Come on. All right, and then we've got the 2103. Next target below is 2101.50. I'm sorry, 2102.50. That's the monthly VPOC. And then below that, we've got the 2100 area, Centennial number, and CLVN. And then the next big target below is going to be, there's one at 97, but the big one is going to be down here at the 93.75. All right, and then if I don't think we get much more than that, but your next target below is going to be the 89 area, and then below that, 87.50. Oh, I've got it. And then we got another key line in the sand below us at 82.50, and then all those targets that I don't think we're going to get down there today. So if we do, we'll talk about them. Now above us, look for the overnight high to be taken out and a test of the 20 and a quarter. The 22. And then if we get above 22, don't even think about getting short until we take out at least the first, a high at 24.50. But really, I wouldn't want to be short right here. I'd be looking to be long and staying long for a continuation move to start taking out some of these unequalized highs. There is a measured move at 28 as well. And then above the 34, there's measured moves at 39, 42, 50, 50, and 66, 66 and a quarter. Those are the measured moves that I have. There's a couple other ones, minor ones, but right now, I think our main target above is this 2450. Well, 22 with possibility of the next big target being 2450. And we'll have to see what the market gives us. Taking a look at gold, we've been talking about the weakness in gold. I'm still anticipating that move down to the next big target. We're coming up on it. Been talking about this. The next key level for us right now is this 34, 34, and if we break that, I've been saying this now for last 2 weeks that the main target below us for gold is this 1128, and I'm expecting to find some buyers down here at this 1128 for another rotation back up towards the 1200s again, and that composite VPOC that goes all the way to October 2008. But 34, if we find some responsive buyers, we could get a bounce back up into the 39 area, maybe test the range that we just fell out of. Balance in this area is 43. A break above 44 might be another good trade to come up into. This 49 is not valid anymore. Up to test this 50 level, and then if we get above the 50 and a quarter, 50.20 I should say, come up into the balance that we just fell out of in this microcomposite VPOC up here at 54. But with me, if we get any movement in the indices to the upside, look for the break of 34 and a move down towards this 28 and our main target below. So that's going to complete our pre-market morning session. And as always, trade well, trade safe, and we'll catch you on the flip side.